up, everybody? Good morning. When you're ready to get started in 2 minutes, hang tight and we're going to get going. What's up, everybody? Good morning. Smash that like button. Get ready to get started. For a gap fill today, but let's see what the market does. Disney's open up, screaming to the upside. I like it. Bob Iger, CEO again. Netflix taking a little bit of a sympathy move off of that. And I'm currently live on the Good Morning Friendswood podcast. So I can do two things at once today. Normally I can't, but we'll see. Right. Market opens in 2 minutes. News is pretty clean. It's a new trading month. I'm checking out Financial Juice this morning. There's really nothing to talk about that's it's really worth Thanksgiving week. So clearly you're going to have a lot of light traffic. It's going to be less volatile, but it's also going to be directional. If it picks a direction, market tends to just float generally in one direction. Nothing this morning that's of interest in the news. We'll check the earnings calendar today, see if there's anything important. 30 seconds, we get started. 28. Zoom today. I don't think there's a lot of big big movers. Let me double check. This week is going to be very light. So today's going to be very heavily dependent on liquidity map playbook. This market's going to be stable there. So, start in 1 minute. Check it out. Pre-market check. 5 things we do. Let's pull this sticker here. Pre-market check. Rational, rational, rational. We have NASDAQ inside the bands. S&P, RTY. VIX has gone nowhere. That's pretty good. What are y'all up to today? Having a good week? Everybody doing something cool for Thanksgiving? Don't forget to smash the like button while you're here. Don't forget to copy and paste the stream everywhere you go. Tell your friends, tell your family, tell your grandma, tell your dog. I don't care. It's good people to watch. Bring them in. Every once in a while, on Monday, I'll have to mute my mic and chime in. Looks like market's open. Let's go. We'll look at the pre-market numbers. Run SPY. My guess today, if I were to take a guess, with volatility and decline, the market's going to find very, very light activity, and it's just going to hedge in whatever direction you are. I don't think we're going to break monthly hedge pressure. We get a new monthly hedge pressure, which means a new monthly map for the week today. As soon as that comes through, we're going to look at that. Morning. What's up, Benamert? Blue Edge. Abe, Tommy. Let's go. Just... It looks like we got the numbers coming through. Some of them. 395 hedge pressure, 395.5 on S&P. Resilience is getting ready to get started. Okay, so far we got SPY 400 area on the bull side for the new monthly. Waiting for monthly hedge to come through. So let's take a look for these pulls. Lately, I'll tell you guys, as there's been an industry change event where they've started issuing new expirations for Tuesday and Thursday options, us being on the forefront of technology in this realm, we're also battling with their infrastructure of our data providers being able to get us the information quickly. So they're struggling to get it done. And as long as we're sitting here waiting for them to do it, we're going to do our best we can to get our stuff going. So if our data pulls are late, our data providers are struggling. So let me put in this November 16th. Make sure you change your date on the monthly. Everybody go to the Classic app really quick. Bring your monthly up. Put in that third Friday. It looks like today data's coming in just fine. So hopefully they've got something worked out. Put the 16th in your Classic app if you're still using it. We were mean reversion long up. 360 on the downside was that QQQ level. So we're looking pretty solid there. Or is that SPY level? So 360, 395. I'm liking it. Let's make sure we get that going here. Loading up that first data. Take a look at this. All right, we're looking good. Resilience is positive, which is a great, great, great sign. We have mean reverting short up, which basically means we're stuck in a liquidity pocket on the S&P. So mean reversion, right? This is where your call territory is and your bear territory. Sorry. So where your bull zone is and your bear zone is. Bulls and bears are both upside down and stabilized in the middle. That's kind of why we call it mean reversion. There is typically no mechanism to break one way or the other. When it breaks, it goes. So that's a really tight range today. It's really nice. And it's really good to see monthly down at 360 because the market still has bull structure. That's great for longer term plays, right? But then again, also a bull structure market for this month till the 16th could support at 360, which means a little bit of a pullback there. You're about to call my name in a second to talk on this podcast. So if I mute the mic, that's where I'm at. But we're on Twitter, so make sure you give it a bit of follow there as well. Okay, let's run VIX for the other pre-market check. Nothing, yeah. We looked at the SPY in the morning. We're opening in this kind of liquidity pocket. That's just kind of this area where the market is balanced. There's bulls and bears. You know, normally on holiday weeks, it's light volume with low volatility. So it's going to be directional but slow. We just have to see after about the first 5 minutes which way it goes. There's a monthly hedge pressure on SPY at 360, which is good. It means bull structure, right? So the market's got positive gamma over the next month. This is the new trading day of the month, right? The first or the fourth Monday of the month after we expire monthly options. So this is where the big boys start to shuffle around, and it's a holiday week. So it's going to be a little bit of an interesting move today, I think. No plays yet. I still have my Google. I still have my QQQs. Last week I did talk about getting in Disney. That would have been a lucky little bump I would have got had I done it, but I never pulled the trigger. But I am liking it. I do like Bob Iger a lot. So other than that, I think with everything correlating very heavily with the rest of the market, all stocks are correlating with indices really heavily. It's going to be just picking things that I think are going to be behind the market. That's why I picked Google earlier. I like Nvidia's dip this morning. Not that I normally trade this, but I think AMC's got some good numbers as well. But just on my watch list this morning. So I want to see if Nvid hits a monthly hedge pressure lower, because that's what I gauge my swings for the month. I would say that without volatility, there's not a lot of actionability for day trades today. So I'm just going to look to build into some swings if I can find them. But I want to put my expirations way out past the holidays, so I might do some Januaries or Februaries, just because you know, it might be a light Christmas. So that's it. Nvidia, I like it. It's at the 150 level. I think that's my entry point. Any breakout of 52 3/4 is a breakout run on that. So it's a tight range, and I think I do like these trades for sure. But without, you know, Nancy Pelosi, I don't know. We'll see how that works, right? Maybe she's day trading at home now. Who knows? Hold on, guys. Let me retweet this. Nothing yet. What are y'all doing today? What are y'all trading? Guys, don't forget to smash that like button. Give me 1 second. I'm going to take a quickie little restroom break. I'm liking Nvidia at 150, but let's run the scanner today, and let's run UVXY after we... Y'all like my coffee cup? You know, when I went to Disney, speaking of Disney, the first time I went to Disney World was last year. It was awesome. It's like a magical experience. Why did I wait till I'm 40 to go? Probably because I grew up a poor kid. So I loved it, right? I realized I came back with a bunch of things from Disney World. A bunch of things. Like, you know, you buy souvenirs. I came back with, from Universal, I had a Harry Potter wand and like 7 coffee cups. I realized everywhere I went, I bought coffee cups. It's so crazy. Like every store, so I have like a ton. This is one of Hogwarts alumni. And I've got so many coffee cups from Disney. I'm literally carrying this like clinky sack of like ceramic cups, right? Watching Microsoft. You like it? Okay. What's up, Peter? Good morning. I'm a sucker, I guess, for coffee cups. I have no idea. It's like whenever I went traveling with Nicole, we went to this place called Manitou Springs. It's like this little mountain town. We went to Denver the first time for my birthday. And we sat there at every store we went through, and I swear all we bought were soaps. So we had a bag full of soap. It's like everywhere you go to these little cute little crafty towns, they always make handmade soaps. I think we were just so, you know, in the mode of party that we kept forgetting we already bought soap at the other store, and we ended up with a lot of soap. Excited for today. Hey, what's up? Good morning, Nathan. Peter, what's up? Good morning. Yeah, so we're watching QQQs also in the middle. Nothing really exciting coming on through here. I haven't adjusted any of my swings yet. I'm going to see what the volatility is going to look like in a second. So let's pull that guy up. Give me one quickie after this. I'm going to take a little bit of a break. What you do when you put in, and this talk about this really quick. So if you guys haven't joined the Rocket Scooter free trial yet, this is our software platform, and I'm going to teach you how to do risk management. If you guys stay with me for about 10 minutes, I'll go through one of the best risk management lessons you've ever had in your life. So load this up really quick, and we're going to go through my pre-market check volatility. Until then, hang tight. I'm going to take a 1 minute break, and I'll see you in a second. right, we're back. Right back, hold on. Okay, good morning. Light day, nothing really coming through that's super excitable. So here's what you do every morning, right? There's a pre-market check that we do. We make sure the market's rational, and there's an indicator that we'll give you. Go to our Discord real quick, it's free. We will hand this to you if you join our program. There's a link I'm about to drop. This right here. If everybody goes there really quick, you get access to the world's most awesomest free Discord. There's cake, there's punch, a nonstop party, there's Parcheesi. Does anybody play Parcheesi anymore? Anybody play board games here? Are you guys board game fans at all? I had a game night the other night. Has anybody ever played the board game called Secret Hitler before? Catan, dude, you like Catan? I'm a Catan nerd. I'm gonna tell you this. This is how you know it's easy for you to find friends, right? Or you know that somebody's easily gonna be your friend. If you play Settlers of Catan, right, and you go to a brewery or a coffee shop or something, and you see people that play Catan, and you walk up to them and go, "Hey, I also play Catan," you immediately within minutes exchange phone numbers, and you're like, you have kids, you're arranging like babysitters because you're gonna have a Catan night. Like that's immediately one of those games where people go, "Wait, you play it too? Let's go," right? Secret Hitler is the perfect game. Yeah, it's hilarious. We played it a couple nights ago, a little game night. Funny. So you play Risk. Wait, you have game nights and you play Risk? Ollie, how intense. Like, you already come over. We're going to engage in a battle that might last for weeks. I love Risk, dude. It's a fun game. Y'all ready to get started for the risk management? Speaking of Risk. Okay, let me tell you, I invited some people over for game night to play Secret Hitler. It's a game where it's basically like there's teams. You don't know who's on what team. You're trying to accuse each other of who's on what team and who's conspiring. It's one of those fun games like guess who the bad guy is, right? And if you haven't played it, it's actually really fun. So what happens is you get a bunch of teams. So it's like the good guys against the bad guys, and then there's Hitler. So like Hitler doesn't know who anybody is. The bad guys know who Hitler is, and then everyone else trying to smoke out Hitler from the group. And then you're basically trying to like work your way through it's a political game. The funny part is you're just yelling and screaming at each other for, you know, an hour as to like who you think the bad guy or good guy is. And it's really fun. But when I invited people over to play it, one of the guests showed up with the game in their hand as well, but I didn't tell people that's what we're gonna play. And he's like, "You really Secret Hitler?" And I'm like, "That's what we're playing." So it's like the new ultimate badass party game. Oh yeah, there was cake for sure. You freaked everyone out when you rolled 3 6s 4 times in a row. Give them weighted dice when you play Risk. Man, you are a savage person. Ready to go. Okay, so first thing you do every morning, if you guys go to that Discord link, give you a little seconds there. Also go to the rocketscooter.com website. You can get yourself a free trial. It's 7 days. Look at that. You see, hold on. See where I'm pointing? Like, right, it's right there? Right there where those words are. Then look below, which is down in the link in the description. You can see there's a video link, or sorry, a link to a website. There's also videos there. But go to that website, get a free trial of our software, and I'm going to show you how to do this every single morning. Ready? Okay, so there's 5 pre-market checks, and here's a little tiny video. Let me take the right video here. Don't go anywhere. Okay, right here. This one is called the Irrational Markets video. If you guys want to review, this will show you all these tricks I look at. Irrational markets talk about liquidity, and liquidity is a very simple thing. Very hard to understand where it is, but it's a simple thing. Liquidity is where buyers and sellers find each other. Somebody's like, "Hey, buy this house for 100 grand. You can flip it for 200,000. You're like, "Oh, that's great," right? And then it takes you 10 years to do it. Not a liquid market. Liquid, think about flowing, right? It's easy for things to flow. It's easy for people to get in and out of trades or in and out of investments, right? You have a hard time finding somebody to buy your thing either at the price or the time you want it. Market's illiquid. Very simple. Market makers are banks that are in the middle of the market. Their job is to create liquidity when there is none. So if I want to buy Apple stock and there's nobody selling, right? Somebody has to sell. And they sign up for the job. It's a volunteer job. They're like, "We want to be market makers." And the exchange goes, "Okay, here's a bunch of rules. A, B, C, D, E, follow them. If you do them, we'll pay you for every trade you make." Get in on one side. You're just a professional house flipper. You buy, you sell, you get in, you get out, you move from one person to the other, but you hold the risk until the other buyer or seller comes in. And And they're like, great, we get paid pennies on the dollar to do that. Pretty easy to understand, right? So because there's rules they all follow, we decided to make a trading platform to exploit the consistencies there. Everyone does the same thing. Let's see what they do. And then let's exploit it for trade ideas, right? So in liquidity analysis, which is what we do, it's trying to find where buyers and sellers can or will be, because that's their job as they are mitigating their risk being on the other side of a trade. Imagine like everybody's buying, right? There's a new news event comes out, right? Somehow president gets impeached or something, and stock market starts going one way or the other, right? Something crazy happens, and then all of a sudden everybody's buying or selling. Let's say that they're buying on that news, right? Whatever the case may be. And the market makers on the other side have to sell when no one's selling, right? So they're upside down for a while. They're not just able to easily flip it. The market's illiquid. So they're stuck, right? But you're able to buy from them. So in that situation, they have to hedge being upside down against us in the market, right? So they will take counter trades to balance their risk, because they get paid to market make whatever it is you're buying. Pretend like it's Apple stock, and they're short Apple stock because that's what they get paid to do. The exchange is like, that's your arrangement with us. You need to short Apple or long Apple when no one else will. And so they'll go out there and buy the other side of the coin as options in the other direction. And so when they buy those options, their risk is now zero. They have created liquidity as their job, and then got a counter trade to balance their risk. So we look for those options and we break it down for you. And because we can find those options, we can show you where the traders were when they had nobody on the other side of the trade, like where the real bulls are. If you look on my screen, where the real bulls were, where there's nobody selling to them, and then where the bears are and nobody buying from them. So it's a pure split between the bull and bear side of the market. And that's what Rocket Scooter does. Right out the bat, nobody does this. Nobody can do that. So that knowledge already is power and transparency of where the real positions are in Wall Street. It's one of 15 indicators we have, and we'll go over a bunch of them. So just as a quickie lesson, liquidity analysis has a bunch of ways to find it. We're looking for where buyers and sellers can be, because the market maker's job is to do the same. So you're actually kind of trading like one of those, market makers in the middle. And that's where we use all these skills that we teach you here to understand where risk is, because that's their job. I have to flip something, I have to buy a house and flip it. Where's my risk, right? So the first thing we do every morning, and this is an indicator that we made in Thinkorswim, it will soon be in our platform as we're put all of our indicators into the platform. This one is in the futures market. It's another exploit. And all it is these little green bands. And it's one of 5 checks we do. The first check, we look in these bands. If the NASDAQ, S&P, and Russell, which you see on my screen, open inside the bands, the market's considered rational. Rational is a word that we use. It means the market makers can easily see where buyers and sellers are. It's easy to find, right? You walk down the street, you bought a house, right? You're going to flip it. You're the market maker. You bought the house. You need to find a seller. And you look to the neighbor to the left, just sold his house. The neighbor to the right just sold her house. You gauge the market's liquid. There are buyers and sellers very easily. They picked 500,000. They picked 520,000. They bought at that price, flipped it for 20K more within a week. So price, the price, the time, how long it takes to flip. You can gauge liquidity very carefully, right? So market's liquid. That's kind of like this in futures as well. So we look for the market to be liquid and rational. Rational means you can see your neighbors selling their house. It's very easy to find where that price is and where that time is. The data is available. So rational, there's 5 things we look at. When markets are irrational, imagine that you live 100 miles from your nearest neighbor. You don't really know if they've sold their house or not. It's a long journey. You keep going there and coming back. You have no phone. So if you don't easily see that liquid market, then it's irrational. It's irrational means you have a hard time finding buyers and sellers, or hard time gauging liquidity in general. It's hard to tell, how long do I need to push it out? What price I need to go to? And that's what we're looking for. So the first sign is these bands. If the market opens inside these bands, futures are rational. So futures being rational is a good sign. You can do this pre-market. The second thing is VIX. Again, these bands will teach you guys. If you actually come after this stream here, I'll go over a lesson very quickly on how to do all these calculations as well. So don't forget to smash that like button if you're one of these knowledge bombs are dropping. Go a little bit longer. Yeah, we'll look at the doomsday in just 1 second. So rational, rational, rational. That's good. The next thing is VIX. As long as VIX doesn't travel more than this distance, and I'm going to move this little band here, then it's considered rational as well. These are all pre-market, so it takes 2 seconds to do this. Check, check, check. Good. We open inside bands. Good. Means you're easily able to see where your neighbors are selling. Okay, here, VIX, not unusual volatility. Volatility has to do with the range of price, if you think of it like that. So all those things are checking out good. The next thing we do is we come through to Rocket Scooter, which is a platform. Again, go down. If you guys want to do this one, you can get a free trial, no credit card. Just turn it on now and you guys can play with it. Follow along. Rocketscooter.com. The link is in the description. 7-day free trial. Just literally sign it up and go. The next thing is to pull up UVXY. It's a trick. And you see what it says on here. All we really care about is that UVXY or VIX itself is in decay, which means buyers and sellers are going to be coming in closer proximity. Volatility is the inverse of liquidity. So when markets are not volatile, they're liquid. When they're liquid, it's easier to trade. So VIX is in a non-bull zone. VIX breaking into this bull zone is considered illiquid, irrational. VIX breaking through hedge pressure is considered illiquid, irrational. So VIX not being bullish or not hedging higher is good. VIX being in here, then that moves that way. Did we update the risk intervals? Okay, so here's another thing. Let me double check this. Oh, let's actually go. So thank you for reminding me. I didn't do this. Everybody, by the way, everybody go back. If you're using any of the indicators, we did update our risk intervals. So I need to go update it. This is something I'll teach you guys actually after the stream, but this is actually 29.5. Thanks for reminding me. I did not see this last night. 29.5. On the S&P. We need to update and expand the bands even further. That's good. It's actually a good thing. The margin requirements just went up on index futures, 109 for NASDAQ. So all you do is you just update these numbers. We do them once a week on Sundays. This is another indicator that we do. 109. Thanks for reminding me of that. Slacks. You guys are awesome. Russell is, and so you go to the Discord channel where I'm getting these numbers from. If everybody goes to the Discord, go ahead and go down to, is it RTY? Go to the risk interval bot channel. It's on the right side, members, and then you just get these numbers. RTY is 32. Did VIX change? It is 3.2. VIX has not changed. Okay, good. All right, so the band's got a little bit wider, just like a point or so wider on both sides. Okay, let's check out if the Doomsday trade is on. So we went through those things. Remember, let's double check. So the bands just got a little wider. They were already okay before. They're okay now. Bands are a little wider. VIX is in decay. Just another double check on the usual market as well. This August Triple B, which is one of our old calculation videos that you'll see. This is something that sets the pace for the month. And I'm going to make this a bolder number just so you can remember. And I'll give you guys a quickie lesson on this. Now, I know it's a lot we go over in the mornings, but after the real meat and potatoes of what we do, other than me looking at the market now as we go through hours of live training after this. So if you guys want to check it out, I'll go through a lot of these calculations. But if you look on my screen, it's a number that sits there all month. And I'll give you a secret. Write this down. VX being 25.73 is a number you need to watch every day. And if you go to like Thinkorswim or something, it's /VX. VIX futures trade overnight, and what you look for is VIX being below this number, and it will literally stay typically in that direction without a catalyst, and volatility will just decay over the course of a month. It goes from the third Wednesday until the third Wednesday. So we've got all the way until, I guess, December 15th or whatever that is, for volatility being decay. So what you want when you roll over into a new VIX month, as long as VIX is below this number, that's a great sign for a non-volatile liquid market, which is great, right? We want to see liquid markets because liquid markets don't crash. How to make bands in TradingView? That's a great question. Probably within the month of December, we will have those bands in our platform already, which is going to be easily seen. So it'll be drawn on there for you guys when we get it done. So back to those checks, right? So volatility futures, check. We have 5 checks, so you just go through them one at a time. That's check. Those we call doomsday bands, check, check. VIX, UVXY is not on the bull side of the market. So if we break into the bull zone or bounce off the bull zone, if you interact with just this edge, there's a magic irrationality that happens. So what do we do in irrational markets, right? We sit out and wait for them to stabilize. The magic of trading is not trading. I'll tell you that right now. And I made a tweet the other day and I said, over trading, when you're trading as a, Overtrading in a career as a trader is the first step into a career that's not trading, or something like that. I'm so tongue-tied. Let me remember. But it was okay. Well, it sounded good when it came out. I don't know what I really said. The point is you shouldn't overtrade, right? And so how do you know if you're overtrading or not? And this is one of the things we also will teach you. Overtrading in your career as a trader is the first step to a new career that's not trading. Control means everything in this game. So if you remember that big streak I went on back on YouTube, right? It's like a 70-day win streak. People are like, how did you do that? And I said, well, I sat out like 15 or 16 of those days. Well, how do you know to sit out? That's what these checks tell you. If market's irrational, just sit on the sidelines for the day. Don't try to gauge where buyers and sellers will be. If the market makers, like those banks in the middle of the market with all those sophisticated computers run by, you know, hundreds of people running on hamster wheels that are faster than yours, they are out there with more information. They can't decide where liquidity is, neither can you. Okay, so the third thing we look for is this number not being against this bull side. As long as you don't touch the bull edge or break into the bull edge, it's actually stable. So that's a good sign for VIX. That video that I linked has all of those checks there. If you also go to the Discord, there's a reminder. I've broken down our Discord channel, and I'll show you that really quick, which I love the way our Discord is arranged now. If you go down over here, all the way down at the bottom, you're going to see all these strategy guides with all the summaries. All the irrational rules are in here. You're going to love it. Index Catalyst is one of those. There's a video that we're making on it. We'll release that today. Just telling you there's no catalyst today. It's just like if there's an event that creates a big move in a certain direction, catalyst. And we measure the move has to actually move a certain amount, and it's the amount inside of this little range right here. So that didn't happen today. And the last thing is hedge pressure breaks. So any hedge pressure break can cause an immediate irrational market. So let's go to the indices first. So you can see that really quickly in about 10 seconds, I can decide if I'm trading or not right when the market opens. Rocket Series calculations come out right at 9:30. And as you see, QQQ, trading inside of what we call a liquidity pocket as well. So liquidity pocket, remember the old example from earlier, housing market, right? You're trying to buy. You bought a house and now you can find where the sellers are. Well, here's the buyers and here's the sellers, very close to each other. There's the bulls and bears, very liquid, right? You can see that there are bulls here and bears there in close proximity. Your neighbor is right next door and you can see where he's selling and you can see where you're buying. Easy to see. This is called liquidity pocket. Inside of a liquidity pocket, everybody is, if you look at this, right? Bulls want to buy at 281. Bears want to sell. Wait, hold on. Let me put my glass. 284, sorry. Bulls want to buy at 284. Bears want to sell at 281. 283, sorry. 1 point across. So in the middle, bulls are, you guys see where I'm at? Upside down in their trade. Bears are upside down in their trades. I'll see if the bulls want to long from here or they're long there. Anything inside of this middle, they're losing their trade to the market makers. And also with the bears, the same thing. If they want to sell here and they're short there, then the market's moved above that, then they're also upside down. This is that area where it's like the 00 on the roulette wheel right here. Everybody's losing to the house. So if the market makers have found liquidity, it's actually a funny word. Liquidity means that's the area where everybody in Wall Street is losing their trades to the house. The maximum loss point. If you ever thought the market was rigged against you, it absolutely is. So everyone's losing their trade to the house in the middle. So when you get to the middle, you have no directional bias. You don't, the market maker has going to do nothing but keep it here. If it breaks one way or the other, it's because bulls are getting out or bears are getting out of their trade. Usually people don't rush in droves and randomly overwhelm one side or the other. So, you know, market doesn't randomly get a lot of buyers for no reason on a Monday morning in a holiday week, right? Unless there's a catalyst. There's no catalyst today. So if the market starts to move in one direction, it's because the other side is abandoning their trade very quickly, which causes onset illiquidity. And remember, in the bull zone is illiquid, bear zone is illiquid, in the middle, liquid. So here, as you see, the market is attempting to break through hedge pressure. What hedge pressure does is a net push of long orders just to balance out sold options to dealers. It's just our technology here. This blue line and the yellow line you see at the bottom, wherever it is, these are very, 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 very high volume pivots. And anytime you tap them, you'll see a volume spike. There are actual pivots we trade. So now I determine market's pretty rational, right? There's no bad flags. The next thing I do is I come in and let me snap a quick snapshot of this really quick. My team know. Take a little picture of something. We're making a new update on the platform today. This is a cool new update that's coming out. Let me point Discord up here really quick. Okay. So down here, you can see we have this QQQ is kind of just sitting in the middle. And anytime it breaks through this hedge pressure, there just creates a little bit of burst. As you see, as you press through it, there's a little volume spike there. Let's set up SPY really quick. Can you check Amazon? Yeah, so this is it. Pre-market check looks okay. Market looks good, stable. The reason it keeps squashing like this because hedge pressures are very low on the chart. Okay. So SPY right here, this is the first thing we look at in the morning. Let's get a gauge of the stock market. And since it's kind of sitting here in a mean reversion, what do we say right here, a liquidity pocket, there's really no rush for me to jump in and try to look at anything right now. I'm going to wait for the market to break one side or the other. So easily seen, these ones that say MR, these letters are going to give you a set of codes, and the codes are going to tell you where to pull up your liquidity map. Liquidity map is a little guidebook that we give you to show you where market makers can find buyers and sellers. If you're talking about the housing example from earlier, you're looking for buyers and sellers, this will tell you where they will be. Will they be there in abundance to get the trade you want? You don't know, but you know where they will be. An example is anytime there's a blue line, a yellow line, or these bull and bear zones create activity. There's a whole reasons for them, and in our lessons we teach you how it works. So let's just think about right now the understand how it works and skip to the point that it works. So this part is going to show me if I want to buy or sell. This 395.5 is a key pivot for the day. We calculate them. The best part is we calculate them when the market opens, and they stay still all day long. So you're not chasing a bunch of moving indicators. All that stuff is old school trading. These numbers are going to sit here, and if you want to buy or sell, these are the important pivots that you care to buy about. If you want to long the market, you want to long off of that on the upside. If you want to short, you want to short against it from the bottom. In these mean reverting areas, market is balanced. We really don't take any bias from the middle. We wait for it to break and go. The idea that it's really close, 396 and 395, that's awesome. If I want to short the market, 395 is a place to short or get out of longs. If I want to long the market, 396, I'll wait to go. In the middle, just kind of let it play around, right? It's holiday week, not a lot's going on. And while volatility is in decay, I'm not expecting the market to be very violent just yet. So as there's not a lot of push just yet, because there's not a lot of volume, the VIX in decay, I'd expect the market to be a little bit more bullish, or at least not so bearish, right? So right now, SPY is in this mean reverting area, nothing. And if you actually look at your liquidity map, it's a little guidebook, right? And this mean reversion, it just shows that the market wants to push to the middle in all of the MRs, the misters. So these letters are actually showing me orientation relative to the hedge pressure, monthly hedge pressure. So it's a quickie guide just to reference the different ways things can move. So in mean reverting, there's just no, I don't take any bias at all. Chime in on this really quick. We have somebody SPY. SPY's in the same boat. Let's take a look at resilience really quickly. So SPY in the middle, hard to say what's going on. Resilience, this indicator at the bottom, you guys can all have this. This is an awesome indicator that indicates arbitrage between the S&P. I'm going to draw something on here. This is really neat, and this is something that it's one of the best indicators we have because it can actually get ahead of the market. When it gives a signal, the numbers that it gives you can showcase something before it happens. Resilience, there's two things that happen when the market opens. So let's market. The market today at 9:30 opens right about. I'm going to mark on the chart where we opened. And pretty soon we're going to add this feature where it just draws it for you. We opened right here and it looks like we closed about here. So I'm going to show you with just on my screen with some drawings where we opened and closed. So at the top of the 4 o'clock candle right here is where we closed yesterday on the S&P, or Friday, sorry. And today at 9:30 we open here. This line that's white dash is called half gap. So gap is where you open at a different price than you closed at the previous day. The market just jumps and then starts trading. That gap is created by none other than market makers. They control that opening price. There's an opening print. There's a really neat phenomenon that takes place at the start of the day and the end of the day. 10 minutes before market closes, all institutional traders have the ability to do this. You submit a mark on close order, market on open order. And what it does is you just tell the market maker, hey, I want to buy 100,000 shares of Apple at the end of the day. I don't want to day trade it. I don't want to deal with trying to get in and get out all day. Just fill me at the best price. And it's a very popular thing. They've always done that because the dealers are searching for liquidity. You're going to get an easy fill. If you try to buy 1 million shares of something, you're going to start clearing out those bid-ask tiers and actually pay a really high price for bombarding the market with large order. So that's a way for you to safely get a good, fair price without having to day trade. And all big institutions do that. So that's why you see where I've circled big volume. It's hard to see at the open here, but you see big volume at the end of the day and big volume at the beginning of the day. Volume is, in the way the candles are shown here, is how many times that thing is traded in that 1 minute period. So I'm looking at 1 minute. Each candle you see is 1 minute of data. So on the 1 minute chart, I'm just going to draw what the market will look like. The volume will just kind of like be a little kind of backwards J shape. And at the end of the day, it does that. Lots of buyers there, lots of buyers there, lots of sellers also, both of those. So if you know finding liquidity is looking for buyers and sellers, you'll know that they're going to be here and here at the open and closing price. So if I were to draw like a little teeny weeny dash line, like where that open and closes are, this is where if the market gaps down, typically at the open where you submit those orders before the market opens, they can say, I just want to buy or sell. And if it's a lot of sell orders, right, then the market's going to gap down and we call it a sell imbalance. Market rallied into the end, maybe a lot of buyers, maybe a lot of sellers. The net of that is a sell imbalance. So in the middle, we call like the redistribution zone. Imagine this, right? At the end of the day, everybody buys house from the dealer, and at the beginning of the day, everybody sells house from the dealer. And so now the dealer is like in the middle and trying to get out of whichever imbalanced side they're on. They want to get back to neutral. So in the middle, we just call it redistribution zone. So if you ever hear at the end of the day, there's always a published number like S&P 500,000 buy imbalance, right? So the dealer is the one that bought or sold, sorry, against the people that bought. So they're now in a short trade. They need to get out of it. So in a redistribution zone, it's just this middle area. It's another thing that I've drawn here. And so if you're in the middle and they need to find sellers, you always raise price to find sellers. And it's always going to be at the upper end of that boundary. If you want to find buyers, you're going to lower it to there. That's it. So what resilience tells you, it's an indicator that inside the redistribution zone, when you're in between the open and close, if that white line is above zero, which it is, then the market wants to go there. It is a leading indicator. So right now, if you see, although we're breaking into bear territory, there's enough power right now that there's enough market cap right in the S&P to actually want to bridge that gap and go higher. It's a leading indicator that we look at. Now, if the market's rational, it's going to be nice and clean. And markets are rational so far, so things look great. As I'm looking at it, this is a leading indicator for a long entry point. The problem is I don't have any kind of gauge as to where we can bounce. So I'm going to try to look for clues elsewhere. Do y'all see that? So with this white line being above zero, what it means is inside of the redistribution zone, as long as we support above the open, which will be here. If we support here, see how I'm drawing something before it happens or can happen? This is what we do with Rocket Scooter. I'm going to make a trade plan before the market happens. If I break through this opening price right now, because resilience is greater than zero, despite it being balanced inside of here, I'm now going to forecast that if I support exactly where we open right now, if it bounces above, that is a long entry point to go into the redistribution zone and now go through and close that gap. So because I'm expecting a trade like that and I want to take that risk, I'm not going to buy here. And I put a 1 point stop. With the stop right here. So now what I can do is calculate risk and reward. Here's a long entry. The signal's there. Boom. All right. 394.75 to about 396.20, right? Let's see, I do math in the middle of the day. 1.5 to 1. Easy as that. So what's neat, you guys can see that I have a 1.5 to 1 trade if I wanted to long. Now this has to go through a liquidity pocket and a lot of other things, but that is a potential trade idea. Does everyone see how I'm looking at that? If you like these knowledge bombs, feel free to like the stream, click that like button. Let's get it to 75 today, and I'll go put on my otter onesie that I had from Halloween 2 years ago for you. I might be lying about that, so don't hold me to it, but it's a good risk to reward for you to see me in a costume. Click that like button. Let's go. Now let's start running some plays. Now I have the S&P sitting here. Let's start running the scanner and see if anything pops up. So I'm going to try to find other things that match the S&P. So I'm going to put on the scanner liquidity pocket. So the last two letters have to do with the orientation you have against these hedge pressures, right? So short up has to do with being below hedge pressure and above monthly. So I'm going to go through here and find other things that match the same two letters. This is a neat little trick. And on Friday we did this how to use the scanner video, which is kind of sweet. I need to publish it though. I did have a lazy weekend, I won't lie. But I will have them uploaded this week, I promise. So now I'm going to find stocks that have that same setup, S and U. And then I can say that I'm now sorting with our scanner bear short up, bull short up, and I'm going to find either breakouts to the upside or breakouts to the downside. Okay. So if I want to find breakouts to the upside, I want to find something that's at least above monthly hedge pressure here. So if I go and add one more scanner setting, right, so essentially what I'm going to do is this. This is how the scanner works. It's pretty simple. This graphic is just a little go by that we give you to show how this works. Somebody suggested that we actually draw the arrows on the chart. I love that idea. We're going to try to get that done this year too. As in before the end of the year. As a quickie, where the little spaceman is stabbing, go grab this really quick in our Discord. It's in a channel called Liquidity Map. So Liquidity Map is going to show me where buyers and sellers can be, and I'm going to look for them. So say I want to do that long entry on SPY right now to fill that gap across resilience. Remember, resilience has been saying since about 9:45 in the morning that the market is wanting to fill that gap to the upside. Y'all see that? So it is now 30 minutes later, and that signal came earlier. Our signals are leading indicators because they're arbitrage. It's very rare to have something that's going to hint at something before it happens. Because the SPY is supposed to track the stocks in the S&P, this is telling you that the stocks are moving fast and the S&P is not, so it's lagging behind. Institutional level arbitrage. Arbitrage just means you find something, you find some kind of price discrepancy or illiquidity that you can exploit. Remember Sam Bankman-Fried, that guy, public enemy number one right now? He made his original fortune off of crypto arbitrage. He would buy crypto in the United States and realize in Japan those coins sold a little bit higher. So he would just flip it all day long and fill in that gap. That's arbitrage. Like, ooh, I bought Beanie Babies. And there's this random country that still loves them, and they're buying a whole lot over there. So I can now buy and sell. Check Amazon. Okay, yeah, let's do that. But what I'm going to do really quick on the scanner right here. Can't hear you. Oh, sometimes I mute the mic so that you guys can hear me chat on that podcast down there. Okay, I was talking to the Wolf Financial peeps down here. Okay, ready for this? Market looks like it's selling off. Resilience is greater than 0. What this is telling me is the number of stocks weighted by market cap that are above their half gap and filling their gap. It's a neat little indicator that predicts a couple things. Now, if I just say like an example, I'll draw on the page here, is that I'll draw right down here at the bottom. Oops. Okay, so say that you have something like C is equal to like A plus B, right? It's plus 2 things. And C is actually the S&P. So let's put SPX right there. Yeah. So if you know that markets find in... So when the markets open and close in that redistribution zone, essentially you just have 2 numbers here and here, where the market loves to pivot between the 2. There's always trade opportunity. As you see with the S&P, there's a really nice 2-point spread. 2 points is really great to go for the S&P. Anything over a point is worth trying to grab. Okay. And if the S&P is equal to the sum of 500 stocks, in this example, we'll say it's equal to the sum of 2 stocks. So imagine that you have 2 stocks in that same boat, like every stock. Let's do like Apple is in that same boat. Apple gap down. So this is the close of the previous day, and this is the open of today. Okay. So Apple gap down, and now it's trading in the middle. So say that A, or stock number A, has a half gap, which is just the halfway point between the 2. So if you're looking where those buyers and sellers will be, it's just like a halfway point. Rocket Scooter draws it for you, make it pretty easier. So we'll call this half gap. And let's say that stock number B, and B is clearly a number, is also in that same boat. So it's also traded down and is lower. Now what you know, and I'll just tell you this, you can explore this on your own, but from the halfway point, even on the S&P on my chart, you can see that the halfway point is a very, very, very volatile fighting zone, right, for the S&P. The halfway point is that balance between the open and close, believe it or not. So from that halfway point, the market loves to pick a direction and pivot down. Here's the first example. At the middle, S&P clearly pushed to one side or the other, and it fell to this one. The market from the middle, and these are trading mechanics. It's something that nobody teaches unless they've been trading. So trading is the mechanics of how markets move, right? So if the S&P, for instance, had an overnight sell imbalance, we're down here. And at the middle, it's going to rocket one way or the other if it moves. And so this particular example, it moved down and it pushed to touch the bottom. Does everybody see that? Big fat yes in chat right here. So when you push down to the bottom, that's a potential trade from the middle to the bottom. Because what happens is from the middle, if there's just a slight imbalance, imagine a seesaw at the middle, right? So a seesaw in the middle. So it's like a seesaw in the middle. I'm gonna put like a bunch of, I don't know, blueberries, bowling balls, whatever they are. If you have 3 on one side and 2 on the other, it's just going to slowly start to tilt and then speed up as it moves, right? So from the middle, it's just going to slowly tilt and then go through. If it's just slightly more on one side than the other, the market will tilt to go the other direction. So if you imagine these are buyers and sellers, right? The market has more sellers than buyers, so it's going to lower price to find the buyers, which would be at the open. If it was the other way around and pricing to raise to find the sellers to go to the close. So that's a long-winded answer of saying at the halfway point, everything wants to either go up or go down. And then the next interaction point is to fill that gap. Do we all understand that so far? It's just balancing the imbalance, right? There's 3 things on here and 2 things there. Well, if you put 1 on there, it balances the imbalance. Right? There's a lot more sellers, then they're going to find buyers to balance it out. Okay. So let me delete a lot of this and show you what resilience is. It's a really neat phenomenon. So if you believe the idea that the market from the middle wants to pivot to the open or close, and you take that, number 1 thing is that the market wants to go from open to close in the redistribution zone. Number 2 is that the S&P equals the sum of the stocks, right? Sum of stocks. Right? The S&P is an index that is equal to sum of all the activity of the stocks, right? Apple goes up, Facebook goes down, and you add it all up, and the S&P is like, this is the sum of all the stocks, right? And SPY is an instrument that we trade that tracks the SPX. So if you think about this little chain reaction, right? SPY is something you can trade that's equal to, give or take, the SPX in a way, which is equal to the sum of the stocks, okay? Now, you can buy or sell SPY by itself without buying the stocks, but if somebody starts to buy a bunch of the stocks and the stocks go up, the S&P will also go up relative to that. If the SPY is sitting nice and stable, some arbitrage, remember that curly-headed Sam Bankman-Fried Reed guy? Arbitrage, same thing. Ooh, that's valued high and this is not. Let me long this and let me short that and bring them together. So if the stocks go up and the SPX goes up, you can assume the SPY will also go up, right? Because if it doesn't, somebody will notice that and also make it go up. So a long-winded answer is that if S&P is the sum of the stocks and the stocks want to move from half gap to fill the gap, now you have an indicator that can lead the market. Exploiting the idea that this little autopilot right here is tracking like little tiny winds that come through, like the wind. You have an airplane that's flying through and a wind blows it this way. This is going to be the autopilot that kicks in and steers it the other direction so that it stays on course. So that tracking or that autopilot, whatever you say, is an exploit, and that's this indicator right here. Will the market be bullish after Fed? It's hard to say Wall Street's perception of that. I think that any tapering of rate hikes or 50 basis point or less is going to not be perceived as bearish immediately. But it's hard to pick the direction of the market, especially during the holidays. So back to resilience very quickly, is that at the middle, if say that stock B is trading a little higher, all of a sudden you have C equals A plus B, right? And C is the thing we're trading the index. You wake up, Apple is sitting at the middle, or A is sitting at the middle, and B is sitting at the middle. See this? And so if somebody starts buying a little bit of B and it starts moving higher, as I mentioned before, filling that gap is where it wants to go, right? So the market moves a little bit higher, but hasn't filled that gap. We know that that is the next move that hasn't happened yet. So one of the neat things about it is if everything's balanced, and let's draw C again. So C is the thing we want to trade, which is the S&P, and it's in the middle as well. Okay, everything's balanced at this middle. Then all of a sudden, somebody buys a little bit of B, which you know the index is likely going to go up a little bit. So if B tilts the scale just a little tiny bit to the north side, there's an additional potential move B can take to complete that redistribution, right? We call this the implied move. Does everybody understand this? You get a little yes in chat to explain this little feature. So everything's balanced in the middle, and then one of the stocks, you put one more beach ball on that little seesaw there, and now the market is slightly more bullish, right? And it moves a little bit, and you know the next move is to find that bulk of sellers to fill that gap. So we call it the implied move. So now the S&P hasn't moved yet, but we know that the S&P needs to go up a certain amount to account for this potential move that hasn't happened. So now resilience is exploiting that idea. The resilience is saying, ooh, the S&P is undervalued because this should do this in the future, and therefore the S&P is undervalued relative to what it should be. If you sum up all those implied moves in that redistribution zone, resilience becomes a potential leading indicator to show that if one stock, enough stock gets bought just to tilt the scale, that the S&P has its own potential tilt or pivot from that middle as well. And if the S&P has its own open and closed zone, and S&P is like trading lower like it is now, but the resilience number is showing that the implied moves are actually moving up, then the S&P likely will move up to fill its gap, and that's what I'm talking about today. So enough market cap is actually holding the market up that resilience is greater than zero, then I don't believe that selling pressure is going to hold. So right now, as there's that first test dip, we're going to check that resilience number right there. Again, the implied moves are market moves that haven't happened yet, and resilience is still saying there's enough market cap as some stocks are just floating above their own middle, that they're likely to push higher and fill the gap because that resilience number is greater than zero. So if I'm looking at it, even today, right, this, as I said, if we break through and support this and res is greater than zero, I'm long in the market, which we haven't broken through and supported yet. because it's telling me there's enough stock. The S&P is going to ultimately track the index, right? So there's a little bit of selling at the open, sure, pre-holiday selling, right? The market looks like it's selling off. We're going to be little oracles here. Right now, this is a sign you want to watch. So make sure that after like 3 or 4 minutes that it's back above here and doing okay. If you support at that open back in that zone, then it's going to go to the close. So right now, I will long if we break through here just to go to there, as long as that's greater than 0 with a 1 point stop. So this is about 394.7. So 393.75, which is about right here, would be where that trade would exit out. So if I long here and double down there, which I haven't done anything yet, but long here, double down there, this is a great is going to show pure arbitrage between the S&P and the stocks. The idea that the S&P and the idea that arbitrage exists means it will be traded. Whether the stocks will come down or the index will go up, it doesn't matter, but arbitrage will be seen very rapidly out the door. So resilience takes precedence over the liquidity map. So scalping between the range and the redistribution zone is very popular. If you are in the zone, if resilience is above 0, you expect it to go higher, like it tried to here. If you are out of the zone, and see, some days it will actually have a really strong lead, like today. That's a looking for that to test as resistance. What vehicles I usually trade? I trade index futures for my day trading, and then I trade options as well on the stream, just to demonstrate different things on the actual platform. So Monday is a light day. I'm waiting for any sign to be bullish, and if I don't get a sign right now, I'm not taking any entries just yet. Just waiting. When markets are not bullish, and I am bullish, even in a bear market, I'm looking for bull entries. I'm not getting a clear short signal, so I'm just waiting for something good to pop up. They're about to call my name on this podcast here in a second. A bit interesting phenomenon actually talking about it on my live stream right now. We have different competing indicators going on. The market is pushing slightly into a bear side on the SPY, but the resilience indicator that shows arbitrage is very blazingly positive. It means there's enough market cap to the upside. And it might just be like Disney and a couple other stocks that are carrying it, but it's showing that these stocks are moving up while the index is moving down. So I think it's a mechanism of low volume. People, you know, there's clearly an arbitrage opportunity, and I am actually seeing the bull side trade being potentially there just to fill the gap, but not a rally. So the SPY looks like it wants to fill the gap to the upside. But what you're seeing is people are dumping SPY first while not dumping the stocks. There's a big discrepancy between the value. And so whether the stocks are all going to start coming down in the next hour or the SPY is going to burp up really quick, it's hard to tell. So getting that competing signal is always something you'll see in typically going into a holiday week where there's low volume and nobody's doing much. Very rarely that you see the S&P lead the stocks themselves, which is what you're seeing this morning. So resilience is just telling you how much market cap is actually gapping up and wanting to fill their gap to the upside, and it's positive. There's more stocks on the upside, a gap up or gap down and fill the gap to the upside than there are stocks selling off. With the S&P dipping like this, it's a potential scalp opportunity as they all meet in the middle. So nothing is breaking out. There's no good bull sign or bear sign anywhere. And volatility is also in decay, which is showing liquidity in the market. Despite there being low volume, the three people playing are actually not really one-sided market. It's pretty balanced here, I'd say. I think we're gonna stay ranged for today, but if the market does move, it will move in a direction and pick one, at least to the upside, because it's not volatile. On the downside, it'll just be choppy, I think, if we continue to pull back. No clear signs of anything. Disney is starting to sell off a little bit, and I've been watching other stocks for like short setups, like CVX is looking crazy. AMC was one of the ones I was talking about today. They're just all looking very directional as well. So not too many things I'd say are going to show opportunities early on with a lot of volume to press, and there's not a lot of momentum going on holiday week, like I said. So I'm just kind of trying to see if I want to dig into my QQQ calls that I have for December, and they're very much in the green for me, but they are definitely out of the money still. I just grabbed them way back at the dip, so I'm trying to decide if I either want to lower the strike price or actually push them out past the Christmas holidays. So today is actually an adjustment day for me. I don't see any directional moves, so what I'm going to do is exploit a little bit of this non-volatile dip and probably cost average in to my overall QQQ position and push it out to maybe January or February. I'm still taking that bull side position in general, just because I expect the FOMC to pop up a 50 basis point hike, which I think will be perceived as not super bearish, even though we're in a bear market. And just some end of the year, tax loss selling, it's probably going to happen, but I don't think it's going to be that volatile either. VIX in decay, market's not expecting a choppy end of the year, so I think that's a good sign, or at least a moderate bull swing to continue. My QQQs are 310, which is kind of far, but I did get them way at the dip, so I did buy them in, I think, like late September, maybe early October, sorry. And then I have them all the way to December, so they're doing okay, but I might want to reshift into that 300 strike if we do get a dip this week, so I'll have to look on that. Other than that, no day trades today. Nothing looks good for me. Ready? Let's look at Amazon really quick. Okay. Okay. So let's show the scanner very quickly. If you guys don't mind, if you just new here, if you tap that like button, subscribe to the stream, you can hang out with my ugly face every day and let me annoy you while you trade and listen to subpar copyright-free EDM music that's tastefully appropriate for people of all music types. Now, if y'all want me to be my real self, you want me to jam to some melodic death metal, which is kind of music I normally listen to, I'm sure I'd lose half the viewers, but I think one day I'm just going to not care what y'all think and just play the music I want to play. I'm going to tell you guys, the best kind of music to trade to is death metal. He's got a little selling they're talking about on the podcast today. Yeah. Yes, sir, Nate Dogg. Now, when I do something on this entry, I will actually talk about what I'm gonna do today. I just want to gauge the market. This is the first day of the trading month, so monthly is the third Friday of the month. So on the third Friday of the month to the next third Friday of the month is when stocks tend to start their new race. Imagine like that's when the stock trading month starts. It's trying to do something for that monthly expiration, because what happens is, you know, your 401k, you pump money into it and they always buy stocks with it. The manager is going to either hold stock or sell stock with most of the American public's money. And so when you hold a stock for, you know, more than a quarter, you get on the stock you get on your books that you hold the stock on what's called the ex-dividend date. You get paid a dividend just for holding that stock, whether it's going up or down. You get a little bit of free money. And if you ever look at your like 401ks or IRAs, they always say, you know, dividend, this and that. That means they have to hold the stock up to that date, which means a quarter at a time. If you're holding the stock a quarter at a time, you're going to buy monthly options to hold through that month, just in case it starts dipping. You want the ability to get out of that position, right? Like you're long the stock and you buy puts to stay in for a quarter. So monthly options are where the big dogs are playing. Monthly options are your 401k, your IRA, your mutual funds, everything. So this is the big institutional money that wants to be long or not be long, right? That's your gauge of they're going to cash or not in the market. So they're in stock or in cash. So monthly hedge price is a very important number that looks at the hedging for that month scale. So the December 16th expiration is the third Friday of the month. We just rolled into a new month. The following Monday, which is the fourth Monday of every month, is actually the start of a trading month. The fourth Monday of every month is the most important day to trade any stock when you're swing trading. The fourth Monday of the month tends to be where that decision is typically made, as in the aspect of where Amazon is. Amazon is below its monthly hedge pressure, which means for the next month, Amazon is bearish out the door until it goes to the other side. Pivoting monthly hedge pressure is what I changed my particular bias from bear to bull. I trade on whatever side of hedge pressure we're on monthly, which is this yellow number. If we are below the yellow number, I want to buy puts. I want to be short. Okay. The left to its own accord with no volume, right? What happens? Watch this with Amazon, everybody. Look, with no volume, which is a holiday week, right? Everybody's on vacation or whatever. Can you see that Amazon is on the short side of hedge pressure, and it just hits it and just starts to kind of just slowly trade down, right? It's not collapsing down. It just is not finding any volume. This is what hedge pressure does. And this is what's great about our stuff. If you see right here, I'm going to show you what the liquidity map says. And when you don't have a lot of counter volume or fight, right, on a holiday week, the market's just going to kind of be robotic, right? It's a nice, slow, easy glide, no turbulence in the airplane. And the liquidity map says BSD. And you can look down here where my mouse is. You see where it says BSD, where I'm circling, bottom. You can see that there's a general particular selling pressure, right? And so while it's not showing it here because the yellow and blue are actually on top of each other, they're the same place, there is a resistance against that blue. And the BLD is the same setup with just the two flipped ups, with just price inside of the hedge pressure. So being below blue or above blue, you can see that there's a resistance against that yellow. If the yellow is at the blue, it's also resistance there. So liquidity map is showing me I'm expecting there to be a resistance and some selling there, and it just hits and drifts lower by the book. You're just glad I'm not playing Christmas music? Asking you shall receive, sir. I shall be blasting Mariah Carey within a 5-minute time span. Run now while you can. All I want for Christmas, fucking cost to make some money. View on Apple? Okay. Do you see how there's just a resistance pressure? So right now, on the new first or fourth Monday of the month, I'm ready to start analyzing my swings. Oh boy, Apple, ugh, right? So far, I mean, Amazon's so far away. My mindset should be, okay, I'm bearish from here, or I'm bullish when we get above here. And this number will move every day, so you're going to reanalyze it. But for now, Amazon has that resistance that's going here. You're going to look at Apple as another example. Take a look. Don't forget, guys, go to that link below in the description and get the free trial. If you just subscribed and you need access to the Discord, we have a lot of people joining today. Send me a message and I will give you guys your access. So if you guys go to my Twitter, I just retweeted something earlier about this. I'm on a podcast called Good Morning FinTwit every Monday. So I'm like, when you see me mute the mic, I'm talking over there. So I'm talking here. I'm a panelist on that show. They're about to talk about tax loss harvesting, which is something that's be very important going into the new year. So catch that. Gav Wolf Financials pulled on 2 specialists that understand that. And actually, I'm going to learn something today. The view on Apple. Liquidity map is telling me that Apple is in a specific setup. So if you look at every time you open up Rocket Skier, this is what I want you to do. When you type in your ticker, this is a little training example, you will see that at the top with your liquidity map indicator will tell me a bunch of letters. Then I'm going to go to my little cheat sheet, which we give you in your Discord. It's free. Go grab it. Will tell me how to interpret those letters. BSD, BSD. BSD is telling me that from the open, which is this black dot, the market is likely to have resistance at hedge pressure to push it back to open. Okay, it's neat how this works. So clearly we are not opening above. We actually opened below and broke through it. So right now we're in this area where there is the open price is now resistance. That actually started way up here. So in this mode, I'm expecting hedge pressure to be a resistant force to push to what's called next resistance. So we have to find where that is. So today, with all that knowledge you just have about Apple, there's nothing bullish about Apple until it starts to support hedge pressure again, which the second letter is S. It can be L or S. L means you're above the blue. S means you're below the blue. So if this changes to an L, meaning that you're in this zone now, how would I trade between these 2 zones if it was a BLD instead of S? As you see between these 2 hedge pressures, you can see that there's also a scalp opportunity there. So what you can actually do is on your chart, and we can actually have this automated for you when we get this done, is that's what the arrows will look like, right? If I'm going to take scalps, here they are. I've got one from there, one from there. The market from here goes to what's called next resistance. So I don't know where that is. We'll have to decide that in a second. Then on a BLD, any breakup above monthly hedge pressure goes back to the open, as you see is right there. So if I were to redraw everything I see from this little guidebook to what I want to trade, I can see that there's just a potential path there. That's back to open. And then anything above open has this like next resistance as well. So now what I've done is I've broken Apple up into some zones to trade. Like automatically, Apple hasn't moved, and I can now formulate a trade plan. So if I wanted to scalp Apple, you see how this BLD had an upward move and a downward move. Do you see this right here? Look at those 2 trades liquidity map already has. Boy, that looks like a nutsack. I mean, not. Let me draw it differently. Here you go. Boom and boom. Like that. Okay. Just like I drew. There can be buyers here. There can be sellers there. And those scalps are very sharp, right? Those pivots were there. Start of the day. So today, with Apple rejecting this hedge pressure, let's find out where that next resistance is. Like, where can it support? Let me show you how to do it. There's a trick. So hang tight for 1 minute. If you guys sit here, don't forget to like the stream. In 1 minute, I'll show you the tricks on how I pick those price targets. Where can Apple fall to, and where can Apple rally to if it breaks out of that range? Okay, hang tight, and we'll be right back. We're about to turn in on the hour. Typically, the YouTube stream ends right here. We're going to carry over into Zoom. So if you guys want to carry over into the next layer of our show, we're going to some educational topics. I want y'all to go to our Discord, get in the free trial there, and immediately when you get in the free trial, within 15 minutes, probably about 11:15 in the morning, we will go into a little Zoom call and we'll go over some educational topics for everybody. Sounds cool? You guys down for that? That's where the real meat and potatoes are. So we go through a lot of stuff to train you guys on. Can I put Rocket Scooter on iPad? Yeah, you can do Rocket Scooter on a browser. So you can load it up anywhere. It should be okay and good to go. There. Right, so monthly resilience is not trending down and daily is stabilizing positive. Right, so it's neat to see the market is actually so what you saw today was something that's pretty interesting. You saw the index moving before the stocks were moving, and now the stocks are starting to catch up. So it means at the start of the day, people were actually dumping their index products and now starting to dump their stock products. It's an interesting phenomenon to see the index move first. And this is proof of that. The index dropped first while Apple and other things were looking pretty good. And now the stocks are following up. That's that arbitrage op, right? RS indicators are very, I can't read what that word is. Accurate? I've learned a new word today. What does that mean? Or did you mean to say accurate? Is that a cool new word I didn't know? That's just a massive typo of the word accurate. Okay. I was like, that sounds beautiful. Is that like a French word? Create? Accurate along with liquidity map gives us quite solid play ideas. Why risk any swing at those uncertain days? Well, not because, right, daily trade idea is different. Swing plays are because I'm not certain of the shorter or medium term market. Swing plays in general are less active required, right? You just manage the trade. And of course, as far as getting bigger gains, like I can day trade, but that's more activity, right? So swing trade is like in your investment account, you want to buy something when it's dipped and then hold it for a longer period of time. You don't want to always day trade all your money. So I allocate a little bit just to swing because I want to have a biased position that gains money that I don't have to manage. So it's like thinking of portfolio, but active trading. I'm not putting 100% of my portfolio into active day trades. You really want to put in like 10 to 20% or less of your portfolio into day trading, and also only have half of that, so you have the other half to dig into a hedge on the position. Day trading is like the more you do, the more you lose. So you really want to just scalp when it makes sense, when you have those perfect play setups. You don't want to always be like, the myth is as a trader, you're going to all in long, all in short. I'm going to just like build a day trading account to millions of bucks. You tend to want to only day trade when it makes sense and then grow that account in bursts, like trades that you're very confident about. But swing plays are building a solid, stable portfolio. And when the market's not volatile, like below triple B on VIX, that's when I want to be in swings because I'm not going to lose theta at the same rate when the market's volatile or non-volatile versus volatile. So monthly resilience is trending down and daily is stabilizing positive. That's what you said earlier. When you mean daily, you mean just regular resilience. Regular resilience is fairly stable right now. Monthly is less than zero. It means stocks are now breaking monthly hedge pressure and selling off. So there's a few big hitters that are selling off. They're pushing the market lower. So remember, everybody go to our Discord. I'm going to put the link right here. Just click it really quick. You'll be able to jump in to our live session we'll have. Get familiar with the Discord. Go through all the steps really quick. Get in. Grab that Rocket Scooter free trial. Like the stream on the way out. Ooh, 71 likes. I'd have to put on the otter onesie. Oh, man. You guys missed out. This is a humiliating look. Trust me. I should have clicked that button while you could. I'm going to go over scanner settings, and I'm going to show you guys some opportunities that I'm looking at right now. I can already see them on the scanner. I'll show you how this works. And remember, if liquidity map is showing you where those pivots are, the scanner is something that can scan for the liquidity map you want. That's the next level thing. That's the thing that made Rocket Scooter explode on YouTube. And everybody is loving the idea that if you never knew how to pick stocks before, now you have a way to do it. And I'll show you how. We'll get started in 30 minutes. Go to our Discord, get situated, get the free trial, get this liquidity map up, start hanging out, and then I'll pop up that link. Every one of you is welcome to come be invited to that party. It'll be punch and pie, I promise. The trial's not access to the morning conversions anywhere. That is very useful to see ES, hedge pressure levels. If it's not there, then it's not there anymore. Not everything is available in the free trial because you're only here for a week. So in the free trial, you can get kind of lost if we throw too much at you. So just subscribe if you want to check it out, Karan. Just subscribe for a month. I mean, it's $100 per month. That's the half price deal. By the way, for Black Friday, you can lock in half price for our membership, which gets your data feeds, the platform, scanner, liquidity map, everything, plus free access to the Discord, all the training materials. You can help me every day for a couple hours in private Zoom sessions. I can annoy you further for the next couple hours and teach you some trading every day. It's a $200 a month subscription, half price, $100 for the rest of your life. If you're in our first 1,000 members, which you're getting very close to. So we're going to lock in our first 1,000 members. That grandfathered in price, you guys want to join, it's $100. It's like you pay $100 to go to a sushi, $100 gym membership that you know you don't use. I'm looking at all of you. It's the best way to spend $100 is to learn something to take with you. So try it out for a month. You want that conversions area and you liked it in the free trial, why not go pay for it and support those guys? Also got to put food on the table. Okay, love y'all. We will see you 15 minutes or something like that. And you'll have a great day and we love you to death. Go to that Discord now. I'm looking at you. Okay. Adios.